You walk up to the ATM. You need to withdraw $500. Rent is due, groceries, bills. You insert your card, enter your PIN. The screen goes blank for a moment. Then it says, transaction cannot be completed. Contact your bank. You try again, same message. You check your phone. Your banking app won't load your balance, just a spinning wheel. You call the bank. You're on hold, 30 minutes, an hour. Finally, someone picks up. They tell you your account has been restructured. Your deposits have been converted to equity. You ask what that means. They say, your cash is now bank stock. We'll send you the details in writing. You ask when you can access your money. They say, that's uncertain at this time. The line goes dead. Your savings, gone. Your life, frozen. This isn't fiction. This is legal in Canada, and it's already happened before. Let's go. To understand how we got here, go back to 2008, the global financial crisis. Lehman Brothers collapsed. Bear Stearns failed. The entire system was on the edge. Governments had a choice. Let the banks die or save them with taxpayer money. They chose bailouts. In the United States, $700 billion went to Wall Street. In Europe, trillions. The public was furious. Why should ordinary people pay for the reckless gambling of bankers? So governments made a promise. Never again. Next time, banks would save themselves. And that's when they invented the bail-in. In 2013, Canada quietly passed legislation allowing banks to use customer deposits to save themselves during a crisis. Not taxpayer money, your money. The law was buried on page 145 of Budget Implementation Act 2013, Section 39.1 of the Canada Deposit Insurance Corporation Act. No debate, no headlines, no public consultation. It passed in silence, and it's still in effect today. Here's how a bail-in works. Normally, when a bank fails, the government steps in with taxpayer funds. That's a bailout. But in a bail-in, the bank rescues itself by converting your deposits into equity, bank stock. Let's say you have $50,000 in your checking account. The bank gets into trouble. It's insolvent. It needs capital fast. Under the bail-in law, the bank can take your $50,000 and convert it into shares. You no longer have cash. You have stock in a failing bank. And here's the part that should terrify you. You cannot say no. You can't opt out. It's automatic. One day you have $50,000 in cash. The next day you own $50,000 worth of shares in a bank that's collapsing. And if the bank fails completely, your shares become worthless, your savings erased. Now here's what nobody tells you. You think CDIC, the Canada Deposit Insurance Corporation, protects you up to $100,000. You've been told that your whole life. That's the guarantee. But the bail-in law supersedes CDIC insurance. If the government declares a bank systemically important, your deposits can be seized before CDIC protection kicks in. And which banks qualify as systemically important in Canada? Royal Bank of Canada, TD Bank, Scotiabank, Bank of Montreal, CIBC, National Bank, the Big Six. These are the banks where the majority of Canadians keep their money. Every single one is subject to bail-in rules. Your deposit insurance, it won't save you. Here's the nightmare most people don't understand. When you deposit money in a bank, you think it's your money. You think the bank is just holding it for you. Wrong. Legally, the moment you deposit cash, it becomes the bank's property. You become an unsecured creditor. Read your bank's terms and conditions. It's right there. You don't own your deposit. You own a claim on the bank, an IOU. And in a bail-in, unsecured creditors get wiped out first. Here's the hierarchy in a bank failure. First, secured creditors, bondholders, institutional investors. Second, the bank's own debt obligations. Third, you. You're at the bottom. If the bank doesn't have enough assets to cover liabilities, your deposits get converted to equity. But the bondholders, they get paid in full. The system is designed to protect investors, not you. You're the safety net. You're the bailout. Now let me show you why Canadian banks are more vulnerable than you think. The Big Six banks have a combined $6.3 trillion in assets, but their actual capital, the money they own, is only about $350 billion. That's a leverage ratio of 18 to 1. For every dollar of their own money, they've borrowed 18. If the value of their assets drops by just 5.5%, they're insolvent. And here's the problem. A massive chunk of those assets are Canadian mortgages. Canadian household debt is at an all-time high. The average Canadian owes $1.84 for every dollar of income. Housing prices have exploded. The average home in Toronto costs $1.1 million. In Vancouver, $1.2 million. This is the biggest housing bubble in Canadian history. When it pops, not if, when, the banks will be sitting on billions in bad loans. Mortgages will default. Assets will lose value. Banks will face insolvency. And when that happens, the government won't bail them out with taxpayer money. They'll bail them in with your deposits. You think this is theoretical? It's not. March 2013, Cyprus. It's a Saturday morning. Maria walks to the ATM to withdraw cash for groceries. The screen says, service unavailable. She tries another bank. Same message. She goes home, turns on the news. Breaking. Cypriot bank's insolvent. Government imposes emergency bail-in. All deposits over 100,000 euros to be seized. Maria has 240,000 euros in her account. Her life savings, money she saved over 30 years working as a teacher. By Monday, it's gone. Converted to shares in Bank of Cyprus. She tries to sell the shares. There are no buyers. The stock is worthless. The streets of Nicosia erupt. Thousands of people storm the banks. Riot police block the doors. One man tries to drive his bulldozer through a bank branch. He's arrested. An elderly woman collapses outside an ATM. She has no money for her medication. Capital controls are imposed. You can only withdraw 300 euros per day, then 100 euros, then nothing. The ATMs run dry. Credit cards just stop working. People can't buy food, can't pay rent, can't access their own money. This wasn't a third world country. This was a European Union member state, a developed nation with banking regulations, with deposit insurance, and it happened anyway. Thousands lost everything. Their retirements, gone. Their businesses, collapsed. Their futures, destroyed. Canada looked at Cyprus and said, "That's a great idea. Let's make it legal here too." And they did, the same year, 2013. While Cypriots were protesting in the streets, Canadian lawmakers were quietly passing identical legislation, no media coverage, no public outcry, because Canadians didn't know. February 2022, Ottawa. The Freedom Convoy protests are in full swing. The government declares a national emergency. Prime Minister Trudeau appears on television. "We are invoking the Emergencies Act." Within hours, orders go out to Canadian banks. Freeze the accounts. No court order, no trial, no warning. Chrystia Freeland, Deputy Prime Minister and Finance Minister, announces, "If you are a member of a pro-Trump movement who's donating to this kind of thing, your account will be frozen." Sarah donated $50 to the convoy. She's a single mother. She works as a nurse. On Thursday, her debit card is declined at the grocery store. She checks her app. Account temporarily restricted. She calls her bank. They tell her it's been flagged under the Emergencies Act. She can't buy food for her kids. She hasn't been charged with a crime. She hasn't been to court. But her bank account is frozen. Across Canada, hundreds of accounts are locked. People who donated $20, $50, $100. Small business owners who expressed support on social media. One trucker had his personal account, business account, and his wife's account frozen. $300,000 locked. His trucking company collapsed overnight. This wasn't a bail-in, but it proved something even more terrifying. Your access to your money is not a right, it's a privilege, and the government can revoke it, instantly, without warning. If they can freeze your account for donating to a protest, what do you think they'll do in a financial crisis? The precedent has been set. Let me walk you through exactly how this will unfold. It starts with a rumor. Maybe TD missed a payment on a major loan. Maybe Scotiabank's exposure to commercial real estate just got downgraded. The rumor hits Twitter, then Reddit, then the news. Is TD in trouble? At first, the bank denies it. Our position is strong. There is no cause for concern. But people don't believe it. They remember 2008. They remember Cyprus. They remember the Freedom Convoy. They start withdrawing cash. Friday afternoon, bank branches across Canada see unusual activity. Long lines, people pulling out $5,000, $10,000, $20,000. The banks don't have that much physical cash on hand. Most of your deposits aren't sitting in a vault. They've been lent out, leveraged, invested. By Saturday morning, ATMs across Toronto are empty. News spreads on social media. Panic accelerates. By Monday, it's a full-scale bank run. The government holds an emergency cabinet meeting. The Bank of Canada issues a statement. The banking system is sound. Deposits are safe. Nobody believes them. Tuesday morning, the government invokes emergency powers. Capital controls are imposed. You can only withdraw $500 per day, then $200, then $100. But even that doesn't matter, because by Wednesday, the ATMs are offline, and the bail-in is triggered. You wake up Thursday morning. You try to log into your banking app. It won't load. You call the bank. You're on hold for 3 hours. When someone finally answers, they read from a script. Due to extraordinary circumstances, your account has been restructured under federal bail-in regulations. Your deposits have been converted to equity. You ask when you can access your money. We don't have that information at this time. You check the news. Headlines everywhere. Major Canadian bank faces insolvency. Government activates emergency bail-in measures. Millions of Canadians locked out of accounts. Your phone starts buzzing. Friends, family, co-workers. Did you get your money out? Can you access your account? What do we do? Nobody knows. Let me make this personal. Imagine you're 68 years old. You've saved $180,000 for retirement. You worked 40 years for that money. The crisis hits. Your bank bails in. You now own $180,000 worth of stock in a failing institution. You try to sell. There are no buyers. The stock is worth pennies. Your retirement is gone. You can't pay rent, you can't afford medication, you have no income, you lose your apartment, you move in with your daughter, she's struggling too. This is what a bail-in does. It doesn't just take your money, it destroys your life. Or imagine you're a small business owner, you have $400,000 in your business account, payroll is due Friday. The bank bails in, your account is frozen, you can't pay your employees. They walk out, you can't pay suppliers, they cut you off. Your business, 20 years of work, collapses in a week. And here's the cruelest part, you still owe taxes. The CRA says you received equity. That's a taxable event. You lost everything, and now you owe money on phantom income. This is the system. So who benefits from this law? Not you, not retirees, not small business owners. The winners are the big 6 banks. They get to socialize their losses and privatize their profits. Institutional investors, bondholders, hedge funds. They get paid in full while you get wiped out. The government. They avoid the political cost of a taxpayer bailout. And the financial elite. The people who know this law exists. The people who moved their money offshore years ago, the people who diversified into gold, Bitcoin, foreign real estate, they're protected. You're not. Here's what keeps me up at night. Almost no one in Canada knows this law exists. I've asked financial advisors, accountants, even bankers. Most have never heard of it. The media didn't cover it. The government didn't publicize it. Your bank certainly didn't warn you. It was passed in silence. And it's waiting in silence until the day it's activated. And when that day comes, you won't have time to react. You won't have time to withdraw your money. You won't have time to move it. One morning you'll wake up and it will be gone. But some people did see it coming. After Cyprus, a small group of wealthy Canadians quietly restructured their assets. They moved money into offshore trusts, Swiss accounts, Cayman structures. They bought physical gold, stored it in Singapore, Zurich, London. They diversified into Bitcoin, foreign currencies, real estate in jurisdictions with stronger property rights. When the Freedom Convoy accounts were frozen, these people weren't worried because their money wasn't in Canadian banks. The politicians who voted for the bail-in law, they have offshore accounts. The bank executives who will activate it, they've already cashed out their stock options. They're fine. You're the one at risk. The law was designed this way, to protect the elite and sacrifice the middle class. And it's working exactly as intended. Here's what most Canadians don't realize. The conditions for a crisis are already in place. Canadian household debt, 180% of disposable income, the highest in the G7. Housing prices, up 300% in 20 years, completely detached from incomes. Interest rates, rising. Mortgages are resetting at higher rates. Defaults are starting. In 2023, Canadian mortgage delinquencies hit a 10-year high. In 2024, they went higher. In 2025, they're accelerating. Banks are already tightening lending standards, quietly writing down bad loans. The housing market is cracking. Toronto prices down 15% from peak. Vancouver down 12%. This is just the beginning. When housing crashes, and it will, Canadian banks will face a liquidity crisis. Credit markets will freeze. Interbank lending will stop. Panic will spread. And the government will face a choice. Bail out the banks with $200 billion in taxpayer money and face a political revolt. Or activate the bail-in law and make you pay. They've already decided. The law is written. The mechanism is ready. All they need is the crisis. And it's coming. So here's what we know. 1. Canada has a law that allows banks to seize your deposits and convert them to worthless stock. 2. CDIC. Insurance will not protect you if the bank is deemed systemically important. 3. This has already happened in Cyprus. It already started happening here with the Freedom Convoy. 4. Canadian banks are sitting on the biggest housing bubble in history. When it pops, they're in trouble. 5. When the crisis hits, you won't have time to react. Your money in a Canadian bank is not safe. It's an unsecured loan to an over-leveraged institution that can seize it whenever the government says so. The system isn't designed to protect you. It's designed to protect the banks. And when the crisis comes, you're the bailout. So what do? Next week, we're breaking down exactly how to protect yourself from bail-ins, diversification strategies, offshore structures, physical assets, cryptocurrencies. The exact playbook the wealthy are already using, and we're giving it to you. Subscribe right now, hit the bell, because the crisis is coming. And when it does, knowledge will be the only thing standing between you and total loss. Don't wait until the ATM says no. See you next week.